What is going on? Happy Sunday. In this video, we are going to be talking about the stock market, the macro economy, and also how that impacts crypto markets in the month of September. If you stay to the end of this video, I'm also going to be going over some setups on some specific altcoins that I've been trading a fair amount the past few months that I think are really good setups. So let's go ahead and jump right in. So first and foremost, we're looking at the S&P 500. We'll look at that here in a second. But what has recently happened, which we talked about in our last video, is the jobs report last week. Now, what happened is we actually increased the number of jobs here in the United States by 315,000, but the unemployment rate actually climbed 0.2% to 3.7%. So is this good or bad, right? We technically had more jobs, but the unemployment rate went up. So how does that actually happen? Well, I guess more people actually entered the workforce. So companies continued to hire, but actually the employment rate went up because so many people came back and re-entered the workforce. So is this good or bad? To be honest, I think it is bad for the overall financial markets. And the reason is because we would actually like to see a lot higher of an unemployment rate because that disincentivizes the Fed to increase rates. Because we all know that as the Fed continues to increase rates, it makes money more expensive, specifically debt. And, pretty much all money is debt. So if we make debt more expensive, it makes people less incentivized to go borrow more money. And when people borrow less money, they end up spending less money. Businesses make less money. Cash flows go down, typically markets sell off. And that's how it works. And that's exactly what, most people don't want to happen to the markets. They don't want it to get sold off. But we know for a fact that Jerome Powell said he's going to continue to increase rates, and he believes there's going to be a lot of negative impacts on the economy and the stock market. But he doesn't care because all he's trying to do is bring down inflation. So I actually would have liked to see this number be higher. I'd like to see this around 4 or 5% because that would likely slow down Jerome Powell from hiking the entire economy into a recession. Now, when is the next specific number that we want to see? What's the next date we want to keep our eyes on? It is September 20th and 21st. This is the next FOMC meeting, and that is likely when we're going to get a very good idea of where inflation is. So we want inflation to be a lot lower. It's right now went from 9.1% to 8.6%. And I would really like to see this under 8%. I'd honestly love to see it in the low 7 percentile, because if we see inflation come down, that will be huge for markets, because again, inflation is the number one enemy of the Fed right now. And the Fed has specifically said they will continue to hike rates at all costs until inflation actually comes down. So we need to see this number come down, and we're going to look at a few charts and see if it actually has come down. I believe it's going to, at least my prediction, which obviously take it with a grain of salt, is I think we will be under 8%, just because energy prices, at least here in the United States, have definitely come down. Okay, but obviously abroad they're quite bad. But in the case of the CPI, we're looking at U.S. Inflation. Okay. Secondly, the stock market. So traditionally, if you don't know, usually like the months that we're going into, September and October, are usually some light volume type months. And then into the end of the year, you have a lot higher volume in the market. So I would not be surprised if we continue this downtrend right here, because it's very obvious we had a really key level rejection right here. This is off the 200-day moving average. We had resistance twice, and once a third time, which was perfectly at the 200-day moving average. Really, really big bearish move. And then the markets opened up because of the jobs report. If you see this big purple candle, we came right up from the jobs report and then right back down and retraced the entire rest of the day. So I would not be surprised if we open up lower on Monday, if we have a little gap lower. And I have heard that the dollar index is starting to surge a little bit on the other side of the world right now. Right? We don't know what it is, and which I'm going to show you right now. So I wouldn't be surprised if we continue this downtrend. And if we do, we're looking at let's see how big of a move we're looking at from where we're currently at. If we come down to the bottom of the support, we're looking at like a 15, and it may even be greater because it's obviously going to take some time, more like a 17% move in the stock market if we just pretty much almost beamline all the way down to support, which would bring us, let's see, relative to the COVID, just slightly below COVID highs, which I would not be surprised. If you actually look at the stock market's performance and you take out all the money that we've been printing, we are below the COVID highs now. So if you're taking out M2 and all the nonsense that happened with all the money that's printed, we're actually below where the COVID highs are. As far as the dollar, this is what is giving things a lot of issues. So you can see that it's just been absolutely parabolic. The dollar has just gone on an absolute tear. Now, this is the dollar. A lot of people ask me, wait, how the heck is the dollar going up when you're telling me that the CPI is going up, right? So the inflation is going up. Doesn't that mean that the dollar is being devalued? How are you telling me that the dollar is going up? Remember, there's different ways that you can compare assets, right? And in this case, we're comparing the U.S. dollar index as relative to other fiat currencies. And one of the largest currency, I think it's like 30 or 40%, this U.S. dollar is paired against. So it's paired against, it's denominated in a basket of other fiat currencies, and the euro is a very significant portion of that. So what we're looking at is the dollar relative to other currencies. So if we've got high inflation in the United States and the dollar is being devalued, the purchasing power is going down, but the dollar is going up relative to other fiat currencies, guess what's happening to other people in the world? They're getting absolutely crushed because our dollar is actually going down in value, right? Because we just printed so much. We had supply chain issues. There's a lot of things that caused it. It's not just printing money. It's also the massive supply chain issues. Because if we slow down the velocity of goods and services because the whole world is shut down, right? And manufacturers are shut down, specifically over in China. They've been shut down for 2 years now, right? And we slow down the delivery of goods and services, then, when you have too much money chasing too few of goods and services, that's what inflation is. So we actually had really high inflation, but the dollar has been on a tear because other fiat currencies have been getting absolutely destroyed. And it's for multiple reasons. One, because the monetary policy of a lot of other countries is absolutely terrible. And secondly, also because when you've got a ton of fear, where there is quite a lot of fear in the stock market and just overall markets, we've seen all risk assets sell off really hard. When there's a lot of fear, guess what people do? They try to move they sell their assets for money, but guess what money they're going into? They're going into the global reserve currency because it is perceived as the safest. So the demand for the dollar has gone way up because of all of the fear in the markets. And also other fiat currencies are just the inflation rate on those on a lot of other fiat currencies is insane. So we want to see this start to come down. We have got to create a new low. It's a pretty bad sign that we did not blow out this low right here, and we just came down, had a little retest of this high, came a little bit lower, and then bounced up, and now we're making new local highs. We've been higher. How long ago? Let's see how long. It's been a while, honestly. We've got a high. So the last time we were this high was in 01. All right, and guess what happened in 01? It was the massive tech crash. And you can see how the dollar builds when there's a lot of fear in the markets. You'll see the dollar going up because the demand typically goes up, right? So we want to see this start to slow down. It has been parabolic. It's showing zero signs of slowing down, which is really bad for assets because guess what we denominate all of our other, assets in? The dollar. When we look at the stock market, relative to the dollar. When you're looking at your real estate, the price of your house, relative to the dollar. When you're looking at Bitcoin USD, relative to the dollar. So as the dollar keeps going up, it makes it very difficult for other assets to actually appreciate, and we want to see this to start coming back down. If the dollar keeps tearing up, which I have heard it has opened and gapped up today over in China, it's likely to probably do that in the U.S. as well, and I think we're going to see a continued trend of the S&P coming down, which is the 500 largest companies in the United States. So what does that mean for crypto? Well, first of all, we have just seen bear flag after bear flag after bear flag after a bear flag into another bear flag that then went into another bear flag. So pretty much we've just been bear flag city all of 2022, which is just honestly kind of hilarious because all it's doing is, I mean, it's just a slow grind all the way down. So this is like pretty much the worst thing that you want to see is just your portfolio just consistently, slowly tanking over the course of an entire year, right? This is exactly what I posted this on Twitter the other day. I think it's actually somewhat good because it'll weed out the people that really don't have conviction in it right before there's mass adoption going into what, everyone that actually does the research in this space knows is right around the corner, considering all the largest financial institutions, banks, pensions are even starting to look at it. We're getting regulatory clarity. I mean, the signs are there. If you look at the adoption over the last 2 years, it's been insane. Over 100 million users for Bitcoin. Same growth rate as the internet in the 1990s. Everything points to where this digital assets are likely heading. So this is honestly perfect. This is what you want to see when fundamentals are rising. You want to see price coming down because it gives you a big opportunity. So right now, I think, and even the shorter term opportunity is once again in this 11th bear flag. So if we do come below this line right here, which has been a pretty, we've touched it 1, 2, 3, 4. So we come down below 19,600, which if you're going to set a conditional short trade on this or something, I think it's wise to set it a little bit lower. And I would not be surprised if we come at least back down and test the 17,500 range. And then the next thing for me is right around like 14,500. So I do have a conditional short right now. If we do break this, which we've done 3 times in a row, we got a conditional short. When we broke this trend line, rode this all the way down. We broke this trend line, rode this all the way down. And that's exactly why I did 18% last month, is because of the conditional shorts outside of these trend lines. It's a very easy trading strategy, okay? All you do is you look for this really key level of support. You understand what's going on in the macro. You see the stock market keep going down, the dollar keep going up. You see a key level of support. You just put a conditional trade. So when we actually break it, you ride it down and you lock in profit, okay? So I would not be surprised if that happens once again, but I'm actually playing a little bit of the long side right now because we just had a recent bounce off of this because look what has happened. We've hit this trend line, bounce all the way up to this. Once again, trend line up to the top, trend line up to the top, trend line. I wouldn't be surprised if we go hit resistance. We'll see if we can do that. I'm not sure that we're going to do that tonight. We're kind of hitting resistance already in this middle line right here, right around 20K. So we'll see if that happens. If not, regardless, I've got a conditional set below that. If you're not trading, completely fine. May be wise just to set some limit orders. I've done some review of the book, of the order books, and there is a crap ton of orders sitting at $14,000. So if you want to make sure, or nothing a sure bet, if you want to increase your chances of getting orders filled lower, it's probably wise to set them slightly above. If you're aiming at 14, it's probably wise to set them a little bit above 14,500 because there is a ton of limit buy orders right at 14 and 14,500. Anyways, let's go ahead and look at a few alts. So we've seen Avalanche had a really big move after it broke this really key level that we talked about in our communities and made actually a lot of money off Avalanche recently. And it came right back down to test this trend line, then once again fell right below. Very similar to what Bitcoin did. So now what I'm looking at is we've got a symmetrical triangle right here that's going to break one way or the other. I honestly think it's kind of a 50-50 chance of breaking one way or the other. In the way that you would just play that is once again, playing something like where you've got a long position that's sitting right outside of previous resistance. I'd honestly probably want it to be above this swing high right here, and then having a stop there. And I would be looking at this trend line right here, okay? And then I'd be looking at something like this too. If we did break this, having some type of a short as well. So you're good either way. You're not in a trade right now, but if it does break, we're playing both ways, right? You can limit your risk by not entering a trade too soon because you really want to be in a trade, but also playing both sides of it if you start to form something like this and you've got some uncertainty in which way the market or this asset is going to go. Obviously not financial advice. You got to go chart your own and figure out if it's a good position for yourself, but that's the way I like to play things. Same thing with like BNB, right? We've got another setup here. BNB has actually outperformed Bitcoin. It's actually at all-time highs relative to Bitcoin, I believe. We'll look at that chart here in a second. But same thing here, right? You could play both sides. This is actually two different charts right here. So you could, if we actually break this, you can be in a long right here. If we break south, once, below this trend line right here, you can at least bring it down to one of these, support resistance zones right here. And I'll show you how strong BNB has been here recently. Actually, we want to look at BNB BTC. Now, this is pretty much the only coin. I don't know any other coin that's been at all-time highs relative to Bitcoin. So you can see just how strong BNB has been. It's just been consistently outperforming Bitcoin since February 1st of 2021. And the thing that I like a lot about BNB, we're actually going to create another video about BNB specifically on a channel that I just started to post on. It's called Digital Assets with Jeff Seckinger. We're doing project reviews. But one of the things that I like about some centralized, exchange tokens like BNB and FTT is because there's actually real utility behind them because you get reduced trading fees. They've got, at least BNB has Binance Smart Chain. You can, buy things with Binance Card and use BNB. You also they're burning, the profitability of the exchange. They take 20% of the profit of the exchange and they burn BNB. So it's highly deflationary, and you can see, I think if we go to bnbburn.info, I believe it is. Yep. You can see in real time it is burning right here. 19, 20, 26 seconds ago. It's continuously burning, and you'll see the supply chart. So they've burned 38 million BNB, and there's 161 million in circulating supply. And they have, in the last 7 days, they've burned 483,000, and they've burned $32 million of BNB. So that's just 20% of the profits of the exchange they've taken. They buy BNB instantly now, and they burn it. So it's that's something that's really unique to crypto. You can actually control the token supply and do something automated like this in real time, where you're taking profits from a company in this case, and then burning the token, which is great for to have a deflationary asset, because obviously if you constrict the supply and demand is at least staying the same, the asset is likely to appreciate. So the only thing that I worry about a little bit, what's up, Jason? What's up, Lexington, Kentucky? Great little city there. I actually went to college there. Let me know where you guys are from. I think we got like 30 or 40 people on here. Let me know where you guys are from. I'd love to hear if you're from the U.S. in a city here, or if you are abroad. Love to hear where you guys are located right now. One of the questions we just had, and we'll do Q&A actually right now, because we just went through the majority of what I wanted to go through. I think Binance is burning 100 million. So they have another 61 million to burn. So right when they they've burned 50% of the supply, there's going to be left with, it's right here. So it'll reduce until the total supply is 100 million BNB. And I'll tell you this, Argentina, that's awesome. West Palm, awesome area. I know that I've heard real estate is just blown up there recently as far as the price. Very similar to anywhere in South Florida. But I've also heard, or the thing that worries me a little bit, and I think this is why FTT is not listed here in the U.S., is because I think it's kind of likely for BNB to be deemed a security, and like FTT. So I think that's why FTX and they burn 33% of their exchange profit, although I believe they have a significant amount less because the volume on Binance is way higher. But yeah, I think the biggest worry about BNB and FTT is the potential for it to be deemed a security when, all this regulatory crackdown actually starts to come to fruition. Brisbane, awesome. I really like Australia. I lived there for a few months. I worked for a financial consulting company in Sydney, actually, and lived in Potts Point for a little bit. I know that's not Brisbane, but yeah, definitely a fan of Australia. So anyways, I think this week it's very likely, once again, that we continue this downtrend in the stock market. I'd be really surprised if we have maybe we have a little bit of a short-term bounce and we come up to this trend line right here. But I would not be surprised if we just continue the downtrend until this date. Again, if you guys just came in, we're looking at September 20th and 21st. We really want to see inflation come down below 8%. If it's not down below 8%, it is not going to look good the rest of the year. Even if it is, to be honest, I don't think it looks super great for the rest of the year, just because anytime inflation has been over 5%, and this isn't because, my emotional opinion, we've never had a quote unquote soft landing. So we'll see. But also, here's the thing that I want to, everyone to kind of think about. We've never, ever had 50% more dollars in circulating supply where that just came out of nowhere. Okay. A lot of the things in the past 2 years have been absolutely unprecedented. For example, the amount of growth in the money supply in the United States and around the world, it has just been exponential, which is really confusing for markets because everything is denominated in US dollars. So when you just infinitely print everything and just increase the supply of the US dollars so much, it makes it very confusing. Did this asset actually get more valuable, or did it just go up because what it's denominated in just went down, right? It kind of confuses everyone, and I went over this in my previous video, but this blows my mind. The fact that the stock market is actually below. We haven't been. So first of all, we went slightly higher than where we were at in 2007. And then we came all the way down to where we're at now. And if you look how high we were in the early 2000s, this is taking out the money supply, the M2 money supply out of the market. So if you look at this chart, the market has pretty much gone sideways since 1996. But we've printed so much money that it looks like the stock market has gone way up. And that's the absolute delusion that we're living in, is this looks monstrous. But guess what? It's really not, because all we did was just print a crap ton of money, and now everyone's looking around like, oh my God, we just had some massive gains. But really, we just printed a lot more money, and it's unfortunate because now the wealth gap is going to grow faster and faster and faster, because if you're not putting your money into assets, you're not going to outpace inflation. And if you're not outpacing inflation, you're losing value. And if you're losing value, you're an idiot. And it usually comes from people that aren't educated. And unfortunately, a lot of people in the poor middle class do not take the time to get educated. So I'm happy that you guys are listening to this video. Get educated, protect the value that you work for, because investing is not an option anymore. The whole world is completely different now that we've printed so much money. And if you look at the inflation rates abroad, they are even worse. Much worse than what we have in the U.S., Canada, Australia. If you're looking at a lot of other, Zimbabwe has 300% inflation. Can you imagine having your currency going down by 300% in a year after you work all year? You've got less. You got 300%. You can buy 300% less goods and services. That's really, really sad. So anyways, hope you guys have a really great week. Hope this video brought some value to you. If you did, I'd love for you to, first of all, hit the like button. Secondly, share it with someone that you think would also get value. And again, I think this week will be interesting if the dollar opens up once again higher, and the overall sentiment of the market is once again bearish. I think we're going to see a really nice move in the market, potentially down to support here at the bottom of the support line, which would be like a 15 to 17% move, which no doubt in my mind, if we see that, risk assets like Bitcoin they're going to have maybe the 18th bear flag we'll see over the next few months. So appreciate you guys. Have a wonderful Sunday, and I will be chatting with you later this week. I'm going to do one live a week from here on out, and you'll see our next video on Tuesday. Thanks so much, and